Hello traders, Gary Wagner here. It is 10:45 in Honolulu, 4:45 in New York on Wednesday, 10th day of September 2025, and this is the evening report for gold and silver. December gold futures climbed to a new all-time record high today after an unexpected decline in U.S. producer prices reinforced the expectations that the Federal Reserve will resume rate cuts at next week's FOMC meeting. Odds of a 25 basis point rate cut is down from 93% yesterday to 92% today. However, odds for a 50 basis point rate cut has moved up to 8%, which was at 0% just 1 week ago. December gold gained $16.60. That is a net increase of 0.45%, taking a troy ounce to $3,680.40. Gold is now trading overseas, up an additional 70 cents. Today's gains were also in light of fractional dollar strength. The dollar gained 0.09%, taking the index to 97.855. Today's all-time record close in history, just above $3,680. As we have talked about on quite a few occasions over this last month, once gold surpassed these record high closing prices that occurred in May, June, July, and August, it became extremely difficult to predict how high gold could go to. I've fallen back on a couple of mainstream techniques. One is to do a basic fib extension, and that's where these top numbers are derived from. I am looking at the price gains from December to the all-time former record intraday high that occurred on the 22nd of April, and then beginning at the onset of this last leg of the rally, in other words, the breakout above the compression triangle, charting or plotting different price points. The 38.2% at 36.75, which is where we are finding resistance now. A 50% extension of this rally takes gold to 37.75, and a 61.8% extension takes gold to 38.76. However, on today's show, I want to look at some of the oscillators, which, to no one's surprise, are showing that we are entering extremely overbought scenarios. Both the percent D and percent K are well above 80, the first area that we look at when we look at our stochastic oscillator. The same for the relative strength index, or RSI. That is tracking at 74.33. In other words, it is well above 70 right now. Also, when we look at classic Bollinger Bands, we are absolutely hugging the upper level line. So what I have done is converted our standard candlestick chart into a Henkin-Ashi chart. The key difference with the Henkin-Ashi chart is how it derives its open. On a candlestick chart, the open is the true opening price. On a Henkin-Ashi, the open is derived from the midpoint of the prior candle. So what it tends to do is really smooth things out. As you can see, you've got solid green here. This tells us that this trend is still intact. However, the candle size is shrinking, which tells us that the uptrend is losing momentum. My point in looking at the different Western technical studies we just looked at, such as RSI and the stochastic oscillator, is when a market is solidly moving to higher ground, it will continue to show an overbought scenario. The one thing that we can use the Henkin-Ashi for is the pivot. And the pivot is simply shrinking of body size and the color change from red to green or from green to red, indicating that we have moved from a correction to a rally or from a rally to a correction. And that's what we're going to have to see to wait for a pullback so we can position ourselves for the next upside move at a much more favorable price. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.